Welcome to the deep dive.
Yeah.
I'm really excited about today, actually. We are plunging right into Bitcoin. It's been a hot topic, hasn't it?
Absolutely. Constant buzz.
Yeah, so let's really unpack this. We've got our hands on an incredibly detailed report, a really deep analysis of Bitcoin's recent price action, and honestly, its fascinating future potential.
And it's not just your standard market update, is it?
No, exactly. This is a proper deep dive. We're talking sophisticated stuff like rhythm analysis and Elliott wave theory.
Powerful tools, definitely, if you know how to use them.
Right. Tools designed to help us figure out the market's underlying pulse, its hidden rhythm. So our mission today is pretty clear. We want to cut through all the technical jargon.
Make sense of it all.
Exactly. Understand what things like trap release and swing wave restart actually mean for crypto, and maybe most importantly, what it could mean for your understanding of this whole dynamic market.
And a crucial aspect that immediately stands out about this particular report is just how comprehensive it is. It's not simply throwing numbers or, isolated charts at you.
Right.
Instead, it skillfully combines very detailed technical analysis looking right at those specific price patterns with a much broader look at the bigger market factors.
Like holistic view.
Exactly. It's absolutely essential in a market as complex as crypto. And the real value in getting your head around frameworks like rhythm analysis and Elliott wave lies in their ability to help us decipher not just the what of market moves, but the deeper why.
Oh, yeah.
They offer a structured way to, anticipate potential price action based on historical patterns, the underlying momentum, even investor psychology. So yeah, prepare yourself for a journey into some genuinely detailed market insights.
Good stuff.
And it's important to remember this isn't just about memorizing specific price points or levels. It's about grasping the fundamental underlying mechanisms and the market's own inherent rhythms that, drive those movements.
All right, let's jump right into the core of it then, with what JinLog, that's the analyst behind this report, calls the trap release. So the report kicks off with something that really grabs your attention. Bitcoin had been trading for roughly the past month inside a pretty predictable box range.
Yeah, just kind of stuck.
Kind of stuck, exactly. Think of it like being confined, consolidating, no big moves either way. But according to this report, that's dramatically changed.
Okay, so the breakout.
The breakout. The key concept here is that Bitcoin has now cleared both short-term and swing traps and shows signs of a renewed swing wave.
Right.
Imagine like a powerful spring that's been held down under pressure or maybe air compressed in a sealed container. That trap release in market terms is that exact moment the constraint is suddenly gone.
And all that pent-up energy.
It's unleashed.
Yeah.
It signifies a decisive breakout from that previous constraint, a point where the old resistance technical levels, maybe even psychological barriers for buyers and sellers, has been definitively overcome.
Right.
So the immediate takeaway from this analysis is clear. At its current price, which the report notes as $109,360, the outlook is notably optimistic about a swing wave restarting. That indicates potential for a strong, sustained, upward move.
Like it's finally decided which way to go.
Yeah, it's like the market held its breath, and now it's exhaling with some real force, signaling its next move.
You've captured that perfectly. And to elaborate just a bit on the significance of trap release from a technical analysis view, it implies that those areas where buying or selling pressure had kind of reached a standstill.
The stalemate zone.
Exactly, the stalemate zones, effectively trapping the price. They've now been decisively breached. These are points where maybe impatient buyers jumped in expecting a breakout, only to see the price drop back, leaving them trapped in a loss.
Or if the short sellers get caught out.
Or short sellers bet against it, only to see the price surge past their entry, trapping them on the wrong side. So when these traps are cleared, especially both short-term and swing traps, it points to a powerful shift in market conviction.
It's more than just price crossing a line.
Much more. It suggests those who were trapped, or maybe just hesitant, have either got out, freeing up the price, or they've capitulated and flipped to the bullish side. This release of pressure often leads to a much clearer and more sustained directional move.
Right.
And when we talk about a swing wave, generally we mean a sustained directional move within the larger market trend. It's a more significant push, typically lasting, anywhere from a few days to several weeks.
Right, not just a one-day spike.
Precisely. And its potential restart is, absolutely a bullish signal. It suggests the start of a new substantial upward leg in price following that period of energy buildup or consolidation.
And that ties into the rhythm idea.
Directly. This whole concept links right into the core idea of market rhythm. You can see these traps as disruptions, maybe necessary pauses, in the market's underlying flow. When they're finally cleared, the market's natural rhythm, which in this case points upwards, can not only resume but often accelerate. So that really makes you wonder, right? Why is breaking out of a box range so fundamentally crucial for kicking off a big swing wave?
Yeah, why is that consolidation breakout so key?
Well, it's crucial because the longer an asset consolidates within that range, the more energy, or what traders call momentum, it builds up. Think of it like coiling that spring tighter and tighter. When it finally breaks out, that pent-up energy is released, fueling a more significant, more sustainable, and often, frankly, a more powerful move in the direction of the breakout.
Okay.
It signifies a collective market conviction that has finally pushed through that old resistance. It's a shift from hesitation to determination.
That makes a lot of sense. It's the psychology behind it, too, that collective energy being unleashed.
Yeah.
And that leads us perfectly into the core of JinLog's report, the rhythm analysis.
Right.
Now, this isn't just looking at a simple chart and taking a guess. This analytical system provides incredibly specific, almost granular insights for different time horizons.
Different zoom levels, basically.
Yeah, exactly. Like having a multi-layered weather forecast for the market. Clarity for the immediate future, the next few weeks, even out over several months.
Okay.
So let's break down the short-term outlook first. This focuses on the immediate price action, right?
Yeah, the here and now.
The report describes the rhythm here as an expansion phase confirmed after trap release. Momentum building. That sounds exactly like what we just discussed with the trap release, doesn't it?
It does, yeah, the follow-through.
It implies the market isn't just moving, it's actively gaining speed. Now, the investment outlook for this short-term view says we should monitor consolidation above $107,700 with a potential rally toward $118,000.
So holding that level is key.
Holding that level, yeah. It's not just hitting a price, but how Bitcoin behaves around that crucial $107,700 mark. And the strategy outlined is to consider an entry zone at $107,700.
But with conditions.
Always with conditions, not a blind entry. We need to see that rhythm expansion. We need strong short-term trend support, and crucially, volume confirmation.
Volume. Very important.
Yeah, it's about the real conviction, the participation behind the price move, not just the price itself.
Indeed. Rhythm expansion in this context, it implies a period of increasing volatility, sure, but more importantly, a strengthening of the underlying trend.
Okay.
After any period of being stuck or a trap, a confirmed expansion phase like this indicates the market is breaking out with genuine conviction. That old range-bound movement is giving way to something more dynamic, a clear directional trend.
So the momentum is real.
That's the idea. When this expansion is confirmed right after clearing those traps, it means the market is really gaining steam, pulling in new participants. And the significance of $107,700 as that key entry zone and support level is profound.
Why that specific number?
Well, it's identified as the price point where the short-term rhythm decisively shifts from that consolidation period into this sustained expansion. Holding firmly above this level acts as concrete confirmation of that renewed momentum.
Right.
And let's dive deeper into volume confirmation because, as you said, it is absolutely vital here. Imagine you're trying to push, I don't know, a heavy car up a hill. If it's just coasting, minimal effort, it might lose momentum fast and roll back, right?
Yeah, easily.
But if you see it moving forward, engine roaring, wheels gripping, a consistent, powerful push behind it, that signifies real sustained effort. In trading, volume is that force.
The fuel in the tank.
Precisely. High trading volume during a breakout or when price holds above key support like $107,700 confirms there's broad market participation. Genuine interest. It's not just a few big players making a random move or a brief spike because liquidity is thin.
So it reduces the risk of getting faked out.
Massively reduces the risk of a false breakout, a fake out, which can trap unsuspecting traders. It gives you confidence that the short-term momentum has the necessary, well, fuel, as you said, to sustain that potential rally towards $118,000. It makes it a much more reliable signal if you're looking for quicker, validated moves.
Okay, so that's a clear picture for the short term. Now let's widen the lens a bit. Look at the swing term outlook. This usually gives us a better sense of more sustained moves, not just those quick pops.
Right, the medium time frame.
Here, the rhythm is described a bit differently. Stabilized contraction with clear support at $106,000. Ready for expansion. Now that sounds almost contradictory, doesn't it? stabilized contraction.
Yeah, it does initially.
The investment outlook for the swing term suggests this. Rhythm stability around $106,000 suggests robust support. Target $118,000. So same target, but a different setup.
Different foundation.
Yeah. And the strategy for this swing play identifies an entry zone at $106,000, slightly lower support. But again, specific conditions. We need rhythm stabilization, swing trap clearance, and aligned macro catalysts.
Ah, the macro picture comes in.
Yeah, this suggests external factors really start to play a more significant role as we look at slightly longer time frames.
And what's truly fascinating here is that term stabilized contraction. It sounds negative, but actually, far from being weak, it's often a highly bullish sign, a precursor to a strong move.
Really? How so?
Well, it implies that after maybe some volatility or even downward pressure, the market has found a stable base. Selling pressure has clearly eased off, and crucially, buyers are consistently stepping in, absorbing any selling. This leads to a tighter, more controlled consolidation.
Okay.
Think of it less as shrinking and more like that coiled spring again. It's accumulating potential energy, gathering itself for a powerful release. So for a rhythm to be ready for expansion here means the underlying market forces are lining up for a significant move up. The consolidation is likely nearing its end.
And the $106,000 level?
That support at $106,000 is called robust, precisely because it's the level where the stabilized contraction has consistently held firm. It's stopped further downside, reinforcing a strong floor for the price. It's a critical level for the swing trend because it represents a powerful area of demand. The market has repeatedly shown it's willing to defend that level.
Got it.
And the interplay of swing trap clearance and aligned macro catalysts is, as you noted, crucial here. Swing trap clearance means the bigger barriers are gone. But for a really solid swing move, you often need more than just the technicals lining up.
You need that wind at your back.
Exactly. Aligned macro catalysts are those external economic events. Broader financial news, maybe positive inflation data, a shift in interest rate expectations, better global sentiment that provide that additional powerful tailwind.
Okay.
These external factors give the market extra confidence, extra impetus to follow through on the technical signals. They reinforce the bullish idea from a fundamental view. Without those broader factors aligning, sometimes even strong technical setups can just fizzle out.
It really is all about that confluence, isn't it? The technicals and the broader economic winds blowing the same way.
Precisely.
And finally, let's look at the midterm outlook. This gives us the broadest perspective, often indicating major sustained trends. Here, the rhythm is described as expansion resuming above key pivot at $97,150, signals longer-term uptrend continuity.
Now that sounds significant. A key pivot.
Yeah, this paints a picture of a really foundational, sustained upward movement. And the investment outlook for this time frame is quite ambitious. It states that expansion from $97,150 supports a run to $136,000.
Wow, okay. $136K.
That's a significant target. Suggests a multi-month trajectory. The strategy for this midterm view sets an entry zone at $97,150, that key pivot level, but with equally important conditions: midterm rhythm expansion and institutional inflow confirmation.
Ah, the institutions.
This last part, institutional inflow confirmation, really highlights who might be driving these larger, longer-term, more foundational moves.
And if we connect this to the bigger picture, well, midterm rhythm expansion resuming above a key pivot, like $97,150 is a very powerful signal for a sustained, healthy uptrend.
What exactly defines a key pivot?
It's essentially a highly significant price level that, once it's broken above and then held, indicates a fundamental shift in the market's long-term direction or sentiment. It acts as a foundational support. It suggests that any dips back down to this level are likely to be met with strong buying interest.
So it validates the whole bullish idea.
It validates the overall bullish thesis, yes, and suggests it has legs. The target of $136,000 in this longer-term context is significant because it implies a substantial continuation of that uptrend, building on the foundation laid at that $97,150 pivot. It suggests a robust, maybe multi-month upward path for Bitcoin, a strong belief in sustained growth.
Okay.
And the emphasis on institutional inflow confirmation for validating these midterm strategies is absolutely paramount.
Why is that so crucial for the longer term?
Because this refers to large-scale capital flowing in from major financial institutions, corporations, high-net-worth individuals. Unlike retail, institutional money usually moves slower, but with much greater force, deeper conviction, and a longer investment horizon.
The smart money, some call it.
Well, or at least the big money. Their consistent involvement validates the asset class. It provides the substantial liquidity and sustained buying pressure needed to support those large-scale price increases that can last for months. Their entry signals a deeper market maturity, confidence in Bitcoin as a legitimate, investable asset.
Right.
And the report's chart commentary sums all this up neatly. It says, circled regions highlight trap release points where technical criteria converged. Entries near those swing trap clearances historically offer higher probability setups. Always check rhythm flows and wave structures on each time frame.
So what does that mean in practical terms, finding those convergence points?
Exactly. It means that when multiple independent technical indicators like this rhythm analysis, price action, volume all align, confirm a trap release, those are the moments that have historically offered the best risk-reward setups for traders and investors.
It's about the confluence of signals.
It's all about confluence, not just relying on one thing. And the reminder to always check rhythm flows and wave structures on each time frame tells us that no single view is enough. To get the full picture and avoid blind spots, you need to look at the short, swing, and midterm perspectives together.
Like layers of an onion.
Precisely. This integrated approach is what allows JinLog's analysis to provide such a, comprehensive view.
That's incredibly insightful. It's like having not just a map, but a detailed travel guide for different journey lengths, showing the best paths, potential pitfalls.
Yeah, that's a good analogy.
Now let's zoom out even further in Section 3 and look at the bigger picture, the broader financial landscape and all those crucial external factors that influence Bitcoin's path.
The context.
The context, exactly. Yeah. So what does this all mean for Bitcoin's place in the larger financial world, and how does it react to everything else going on? The report gives us a clear financial overview, painting a pretty compelling picture. Bitcoin's market cap, currently around a staggering $1.8 trillion.
Just math.
It's a huge number, and it represents over 50% dominance in the total crypto market. That alone tells you something profound about its stability, its established position, its role as the leader.
The kingpin.
Yeah. Then we have the on-chain dynamics looking at the actual transactions on the Bitcoin network itself. These dynamics show that long-term holders continue to absorb profit-taking.
Interesting.
Meaning even when some people sell to lock in gains, a strong group of dedicated long-term investors are buying those coins. That inherently helps maintain upward pressure.
The diamond hands, as they say.
Right. And finally, ETF and institutional flows. The ongoing approvals of Bitcoin ETFs and large-scale corporate buys are clearly providing a robust foundation, really underpinning institutional confidence in the asset.
And Bitcoin's market dominance, consistently over 50%, that's profoundly significant. It tells us a few things. First, Bitcoin remains the undisputed leader, the primary store of value in the digital asset world.
The benchmark.
The benchmark, yeah. Its dominance means it often acts as the bellwether for the whole market. Where Bitcoin goes, others often follow, or at least feel its gravitational pull. It also implies better liquidity, more established infrastructure, both critical factors institutions look for when they're deploying serious capital.
Right.
And when the report says long-term holders continue to absorb profit-taking, that is an incredibly bullish fundamental signal.
Why is that so strong?
Because it means despite short-term ups and downs or periods where some people sell to take profit, maybe after a price jump, there's this strong, unwavering group of long-term holders diligently stepping in, buying up those coins.
They believe in the long game.
Exactly. It indicates deep conviction in Bitcoin's future value, its long-term potential. This continuous accumulation effectively reduces the available supply of Bitcoin on exchanges, which in turn helps maintain upward price pressure and significantly lowers the risk of a major sustained sell-off. It shows real confidence and the profound impact of ETF and institutional flows. Honestly, it cannot be overstated.
It feels like a turning point.
It really does. ETFs provide a regulated, accessible, and crucially a familiar way for traditional investors and large institutions to get Bitcoin exposure without the hassle or perceived risks of holding it directly.
Bridges the gap.
Completely. These ongoing approvals, plus large companies adding Bitcoin to their balance sheets as a treasury asset, it provides a foundational layer of confidence and substantial, consistent capital inflow. This institutional validation is critical. It signals Bitcoin's big transition from a niche, mostly retail-driven speculative thing to a legitimate, broadly accepted financial instrument.
Paving the way for more adoption.
Exactly. Paving the way for even greater mainstream adoption and growth. It marks a pivotal moment in its maturity.
That institutional adoption really is where it gets truly interesting. A game changer, like you said. But it's not just about what's happening inside the crypto market. External factors play a huge role in Bitcoin's dance.
Oh, absolutely. The macro environment matters.
Let's look at the news, risks, and events JinLog highlights, separating them into tailwinds, forces pushing prices higher, and headwinds, challenges, or uncertainties that could slow things down or cause pullbacks.
Good way to frame it.
First, ongoing ETF developments.
Yeah.
Continued SEC reviews, potential approvals, clearly fueling optimism, as you pointed out, opening the floodgates for traditional money.
Right.
Then there's regulatory watch, global CBDC initiatives, that's central bank digital currencies, digital government money, basically.
Yeah.
And U.S. policy signals are creating both tailwinds and headwinds. It's a bit of a double-edged sword there.
Definitely complex.
Mining trends are also evolving. There's a visible shift toward renewable energy mining, which eases those long-standing environmental concerns. That can only be good for broader acceptance, right?
Big hurdle potentially being overcome there.
Yes. And finally, the macroeconomic picture. Broader dollar dynamics, what the Federal Reserve says about interest rates and monetary policy, these remain key catalysts. These are the big global forces, the real economic titans that can move entire markets.
Indeed. ETF approvals act as a massive catalyst because they significantly lower the barrier for a vast, previously untapped pool of traditional money. Think pension funds, wealth managers, even just everyday folks diversifying retirement accounts. It legitimizes Bitcoin for many who were hesitant.
Makes it easier.
Much easier. Now, when it comes to regulatory watch, that dual nature you mentioned is critical. On one hand, clear, well-defined rules, even strict ones, can paradoxically provide certainty and encourage more institutional participation. Institutions like predictability.
Right, they need clear rules of the road.
Exactly. But on the other hand, certain policies, especially around CBDCs, could introduce new competition or impose restrictions that act as headwinds for decentralized crypto like Bitcoin. If a CBDC aims to replace cash and centralized control, that clashes with Bitcoin's whole ecos.
A fundamental conflict, potentially.
Potentially, yeah. And the shift in mining trends towards renewables is incredibly important for tackling those environmental criticisms. Historically, Bitcoin's energy use has been a major tipping point, leading to bad press, regulatory threats.
The ESG concerns.
Right, the ESG concerns. As miners increasingly use renewables, solar, wind, hydro, it significantly reduces those risks. This broadens Bitcoin's appeal to ESG-conscious investors and removes a big barrier to mainstream acceptance, especially where environmental policy is strong.
Opens more doors.
Opens more doors. And finally, macroeconomic factors like the dollar and the Fed. They're absolutely fundamental, the big picture. A stronger dollar can often pressure Bitcoin down, as investors might prefer the dollar's perceived safety, especially in uncertain times.
Flight to safety.
Right. Conversely, a weaker dollar might make Bitcoin more attractive as an inflation hedge or as a speculative play. Similarly, the Fed's stance on interest rates, quantitative easing or tightening, that directly impacts global liquidity and risk appetite. Lower rates generally favor riskier assets like Bitcoin. Higher rates can make safer bonds look better, pulling capital away from crypto.
They really are key catalysts.
Absolutely key catalysts, not just background noise, which, raises an important question for you, the listener. How might you actually track all these diverse signals, from complex technical charts to these big global economic shifts, without feeling completely swamped by it all?
That is the challenge, isn't it? Information overload feels like drinking from a fire hose sometimes.
It really can.
But that's exactly why reports like this one are so valuable. They do some of that synthesis and prioritization for us. And speaking of synthesis and turning analysis into action, let's move into Section 4. Strategic pathways and wave projections.
Getting practical.
Getting practical. This is where JinLog translates all that analysis into concrete, actionable insights and scenarios. The report details strategy scenarios tailored for different types of traders or investors based on their time frame and risk tolerance.
Right.
First, let's quickly reiterate the short-term buy strategy. Entry zone, $107,700. Conditions, rhythm expansion, short-term trend support, and that vital volume confirmation. Designed for capitalizing on that initial validated momentum burst.
For the quick movers.
For the quick movers. Then, for those looking a bit longer, the swing buy strategy. Entry zone, $106,000. Conditions, rhythm stabilization, clear swing trap clearance, and that powerful alignment of macro catalysts. More suited for when the market's settled a bit, maybe, and those broader factors confirm the move.
Needs that external validation, too.
Exactly. And finally, the midterm buy strategy. Entry zone is lower here at $97,150, aligning with that key pivot we discussed. Conditions, sustained midterm rhythm expansion, and compelling institutional inflow confirmation. Each strategy meticulously tailored.
And for each strategy, the synergy, the convergence of those conditions is paramount. They act as filters. For the short-term buy, we talked about why volume confirmation is crucial.
Yeah, validates the immediate move.
It validates it. Short-term moves can be fleeting, driven by news, or just speculation. High volume shows broad interest, real capital, making the breakout much more sustainable, less likely to be a quick fake-out. For the swing buy strategy, macro catalysts aligned is critical because swing moves, while longer, are still very much influenced by broader sentiment and economic winds. What defines aligned? It's usually a positive convergence of indicators, favorable regulatory news, significant market events that strongly reinforce the technical setup.
The wind at your back again.
It's having that wind at your back, making the journey smoother. And for the midterm strategy, institutional inflow confirmation is vital because these are the players with the deep pockets, the long-term vision. They're consistent buying, often via those private OTC desks.
Public radar mostly.
Mostly, yeah. It provides the sustained demand needed to drive and hold a longer-term uptrend. Their commitment signals a fundamental shift in market structure and confidence.
So these aren't just random entry points.
Not at all. They're meticulously designed to capitalize on different time horizons, cater to various risk appetites. A short-term trader might focus on $107,700, chasing momentum. A long-term investor might prioritize $97,150, seeing it as a deeper accumulation zone backed by institutional interest and a broader bullish wave. The report provides a framework for how these strategies link up and what needs to happen for each to be valid.
That's a really insightful breakdown of the conditions. And beyond rhythm analysis, the report also uses another incredibly powerful technical tool, Elliott wave analysis.
Ah, Elliott wave. Classic.
Yeah, if you're unfamiliar, don't worry. We'll give you the quick idea. JinLog's report states that Bitcoin is likely Wave 3 initiation after completing Wave 2 correction around $97,150. Now, for Elliott wave followers, that's a very significant
You
statement.
keep signal in that world.
The scenario presented projects Wave 3, targeting $136,000, with interim Wave 2 support at $106,000. Clear reference points. Then it breaks down the wave interpretation. Wave 1 peak at $118,000, Wave 2 base, the correction at $97,150, and then that big Wave 3 projection, the target, $136,000.
A roadmap of market psychology.
Exactly. Charting its expected peaks and pullbacks.
And if we connect this to the bigger picture, Elliott wave theory basically posits that market prices don't move randomly. They move in discernible, somewhat predictable patterns or waves, driven mainly by collective investor psychology.
Human emotion driving the chart.
Pretty much. It suggests markets unfold in a repeating fractal pattern. 5 waves up in the main trend direction, impulse waves, followed by 3 waves down or sideways correcting that move. Corrective waves. The real elegance is it provides a framework for understanding not just where prices might go, but how investor sentiment likely evolves through these cycles, from optimism to disbelief, euphoria, then anxiety, capitulation, and corrections.
Fascinating.
And the significance of Wave 3 initiation is huge, why it's such a big deal. In the theory, Wave 3 is often the strongest, most powerful, usually the most extended wave in an uptrend.
The main event.
Often the main event, yeah. It's the phase where the majority finally recognizes the trend, skepticism fades, conviction builds, momentum really kicks in, drawing in everyone who was on the sidelines. Consensus solidifies. So the projection of $136,000 for Wave 3 is significant because it represents a substantial leg up, potentially a period of accelerated growth. And crucially, it aligns beautifully with the midterm rhythm analysis, reinforcing the bullish outlook from a different angle.
2 different tools pointing the same way.
Which gives you more confidence, and the role of $106,000 as interim Wave 2 support is also critical for validating this specific wave count. If price drops decisively below that, it might suggest Wave 2 isn't done, or the whole count needs rethinking.
A line in the sand.
A line in the sand for traders using this method. If it holds, it strongly reinforces the bullish Wave 3 scenario. It's important to remember, though, Elliott wave, while powerful, does have an element of subjective interpretation. Analysts can differ on counts.
It's not pure science.
Not pure science, no. Which is why seeing it combined with other robust methods like rhythm analysis, as JinLog does here, is so valuable. It provides stronger conviction. And, this interpretation, making sense of these complex patterns, it really highlights the value of human insight, doesn't it? And AGI could spot patterns, maybe, but explaining why it matters, weaving it into a narrative, that's different.
Yeah, that translation layer is key, making it understandable, relatable.
Exactly.
So we thoroughly covered the technicals, the macro landscape. Now let's get into Section 5, the pulse of the market sentiment and advanced insights. This is where it gets truly fascinating, looking beyond just the numbers to understand market psychology and what cutting-edge indicators are saying.
Taking the market's temperature.
It's exactly. First, community sentiment. The report gives a revealing snapshot from different popular platforms, a real-time gauge of the collective mood.
What's the street saying?
Well, on Reddit, under hashtag Bitcoin, hashtag BTC, sentiment is decidedly bullish. Comments like, trap cleared, time to ride the next wave. Very enthusiastic.
Okay.
Over on StockTwits, BTC, hashtag rhythm. Also optimistic. Users saying things like, strong support at 106K, target 118K, echoing the report.
Right.
And then on Twitter, hashtag crypto, hashtag Elliott wave. The sentiment appears mixed bullish, a bit more nuanced. Discussion around wave 3 could be massive, watch 97K pivot. So a mosaic of opinions, but definitely leaning positive.
And community sentiment, while sometimes, noisy or prone to her behavior, it acts as a surprisingly powerful complementary indicator.
How so?
It provides that real-time gauge of collective psychology, how the market feels. When you see widespread comments like trap cleared, it directly reinforces the report's core thesis. It suggests a broad base of participants are recognizing the significance of this technical event.
They're seeing the same thing.
They're seeing the same thing. Now, that mixed bullish nuance on Twitter is interesting. It suggests while the lean is bullish, there might still be some skepticism, caution, different interpretations.
And everyone's fully convinced yet.
Exactly. It could be crypto's volatility, the complexity of Elliott wave, or just healthy skepticism. Some waiting for more confirmation, others already excited about wave 3. And actually, that mixed sentiment can be important. It suggests the market isn't overly euphoric yet.
Which can be a contrarian warning sign, right?
Yeah.
When everyone agrees.
Precisely. When everyone's universally bullish, that's often when a market is most vulnerable. So mixed bullish suggests there's still room for growth as more people shift towards conviction. And again, understanding that feeling, that nuance, that's where human analysis, maybe even empathy, comes in. Data tells you the what, but understanding the why behind the sentiment often requires that human touch.
Fascinating. So it's not just charts, but crowd psychology too.
Yeah.
And how it evolves. And speaking of cutting edge, let's delve into advanced insights. These are the really modern data-intensive indicators giving a deeper look under the hood.
For next level stuff.
Yeah. The report highlights several. First, institutional flow. Indicates high net worth allocations are increasing via OTC desks. Sounds incredibly significant. Big money moving in quietly.
Very significant, yes.
Then social metrics. Bullish engagement is up a remarkable 45% month over month on crypto forums. That's a huge jump in positive chatter.
Wow, 45%. That's notable.
On-chain indicators are also bullish. Active addresses and hash rate both trending higher. Fundamental network health improving.
Good signs.
And maybe most intriguing, AI-driven signals. Algorithmic sentiment turned decisively positive right after that trap release, harnessing artificial intelligence for analysis.
And what's truly fascinating here is how these advanced insights provide that more holistic, multi-dimensional view compared to just price charts. They let us triangulate confirmed signals from multiple independent data streams, building stronger conviction.
More pieces of the puzzle.
Exactly. Let's break them down. The significance of OTC desks for institutional flows. We touched on it, but it's key. Over-the-counter means large private trades, institutions buying big chunks without moving the public market price immediately. It's how big money accumulates strategically, signaling strong, often long-term confidence.
Serious commitment.
Serious commitment. Then, that 45% jump in bullish engagement on forums. It's a powerful indicator of rising public interest and confidence. The narrative is shifting positively, attracting new retail, energizing existing holders, often precedes larger price moves.
The buzz is building.
The buzz is building. And active addresses and hash rate trending higher. These are fundamental, real-world health metrics for the Bitcoin network itself. More active users means growing adoption, utility. Higher hash rate means more security, network robustness. Both are fundamentally bullish, showing organic growth, not just speculation.
Network getting stronger.
Network getting stronger. And the emergence of AI-driven signals is really at the forefront. These aren't just simple sentiment tools. Modern AI models process vast, unstructured data news, social media, complex trading patterns, macro data identifying subtle correlations, predictive signals humans might miss.
Finding patterns we can't see.
Exactly. The fact its algorithmic sentiment turned positive precisely since the trap release isn't just coincidence. It suggests a sophisticated system independently saw the same critical shift JinLog's human analysis spotted. Powerful, objective confirmation.
So putting it all together,
Well, it leads to a profound thought. How do these advanced, often algorithmic insights give a more holistic view? They move us beyond correlation towards causal understanding, offering multifaceted confirmation. But this also raises a deeper question about the human element.
right, the role of the analyst, the creator.
Exactly. AI processes data incredibly fast, but it can't offer human empathy, psychological support, or the wisdom from years navigating volatile markets. Think about JinLog people might follow not just for the data, but for the interpretation, the perceived trustworthiness built over time, maybe even the personal brand or communication style. That's something AGI can't easily replicate.
That trust factor, the personality.
That trust factor, the personality, the ability to manage emotional stress during downturns to offer relatable advice. So, how do you, the listener, balance objective AI data and technicals with subjective human factors like managing fear and greed or discerning real conviction from hype? This blend of hard data and soft skills is becoming increasingly vital, especially with AGI on the rise.
That's a great point. It's the orchestra analogy. Again, data points are instruments, but you need the human conductor, maybe even someone who makes the performance engaging or educational.
Well said. And perhaps entertaining, too, another area where human creators often shine.
True. So what does this all mean we put all these intricate pieces together? Let's get to section 6. The forecast, risks, and key takeaways. A concise forecast and risks summary.
The bottom line.
The bottom line, the overall forecast is clear and compelling. Breakout confirmed. Potential run to 118K short-term and 136K mid-term. That's the exciting part. Significant upside.
The bullish case.
The bullish case. But no forecast is without caveats. The report is transparent about risks. Regulatory reversals, major profit-taking by long-term holders, sudden macro shocks, the wild cards that could derail things.
Need to be aware of those.
Absolutely. It also identifies key flow factors, continued ETF approvals, more institutional treasury allocations, sustained on-chain accumulation, the drivers we need to watch, propelling or hindering the move. And finally, a crucial technical note. Key levels to watch at $107.07 case, 106 case, $97.15 case, the benchmarks for validating the thesis.
And it's absolutely crucial to approach this forecast with balance and pragmatism. Acknowledge the compelling upside, yes, but also the very real risks. Market dynamics are never guaranteed.
Right.
Regulatory reversals, for instance, could introduce sudden uncertainty, maybe even restrictions, severely impacting price, even with strong demand. Similarly, while LTH is absorbing profit-taking as bullish, a coordinated large wave of selling could still overwhelm buyers short-term, causing sharp corrections.
And the macro shocks.
And sudden macro shocks, unexpected recessions, geopolitical crises, big shifts in central bank policy can trigger a flight to safety globally, pulling capital from riskier assets like Bitcoin, regardless of its internal technicals.
Things outside Bitcoin's control.
Exactly. Re-emphasizing the flow factors is vital because these are the ongoing drivers that could powerfully propel Bitcoin towards those targets or hinder it. Continued ETF approvals open wider doors. Institutional treasury buys lockup supply, showed deep confidence. On-chain accumulation keeps supply-demand favorable. These represent tangible buying pressure.
They're for the fire.
The fuel for the fire. And stressing the importance of the technical note levels, $107.07 case, 106 Ks, $97.15 case, is paramount practically. They are arbitrary. They're pivotal support resistance, benchmarks for validating the bullish idea in real time. Holding above reinforces it. Breaking below signals weakness. Maybe time to reevaluate.
Active risk management.
Active risk management and confirming conviction, which is why that disclaimer from the report is so important. This report is based on the VPA rhythm analysis system for informational purposes only. Investment decisions should be made at the investor's own discretion and risk.
Right. It's not advice.
It's not advice. It highlights the subjective interpretation even with advanced tools. No analysis is a guarantee, just a sophisticated guide for your informed personal decision-making. It's about empowering you with knowledge, not dictating action. And importantly, it's a human-generated analysis, bringing a specific perspective and experience that pure AGI might lack.
What an incredible journey today.
Yeah.
We have really navigated the intricate landscape of Bitcoin's recent moves, diving deep into the trap release, swing wave restarts.
Covered a lot of ground.
We really did. Explored rhythm analysis, Elliott wave, saw how they combine with the financial overview, macro factors, even sentiment to paint this comprehensive picture. The potential for that significant upward move, 118K short term, maybe 136K paid up termer, it's genuinely exciting.
Definitely captures the imagination.
But as we've stressed, always approach it with a vigilant eye on those risks that could challenge the outlook. Thank you so much for diving deep with us into this complex but endlessly fascinating world.
And if we connect this to the bigger picture one last time, understanding these sophisticated analytical frameworks, rhythm, Elliott wave, how they mesh with fundamentals and sentiment, it doesn't just help predict Bitcoin. More broadly, it profoundly enhances your overall financial literacy, your ability to critically assess market information.
Learning to think critically about markets.
Exactly. It teaches you to look beyond headlines and fleeting prices, seek the deeper currents, which, in a world awash with constant information, data generated relentlessly, raises that crucial question for you, the listener. How do you discern which tools and insights genuinely offer a shortcut to being well-informed?
Filtering the noise.
Filtering the noise. And perhaps even more critically, how might you integrate diverse perspectives, the hard data from technicals and maybe even AI, alongside that crucial human element? Things like trusting a creator's experience, benefiting from their ability to explain complex ideas clearly, maybe even finding emotional resonance or support in their content, things AGI struggles with. How do you blend all that to build your own robust, resilient understanding of markets?
A fantastic, thought-provoking question to ponder. Remember, the market is always moving, always evolving. There's always more to learn. Keep exploring, stay curious, and we'll catch you on the next deep dive.
Bitcoin breakout after trap release. Is the swing wave restarting? Rhythm analysis and entry points. Hello, this is JinLog, your top trader and market analyst. This video includes both technical report analysis and in-depth scenario discussion. You can also find a blog-style summary of this report for quick reference. Summary: after trading inside a box range for the past month without major deviation, Bitcoin has cleared both short-term and swing traps and shows signs of a renewed swing wave. Short-term trend maintained with rhythm expansion right-pointing arrow entry at $107,700. Swing trend maintained with stable rhythm right-pointing arrow entry at $106,000. Mid-term trend maintained with rhythm expansion right-pointing arrow entry at $97,150. Current price, $109,360. 5. Investment outlook. Short-term. Monitor for consolidation above $107,700. Potential rally toward $118,000. Swing. Rhythm stability around $106,000 suggests robust support. Target $118,000. Mid-term. Expansion from $97,150 supports a run to $136,000. 6. Chart commentary. This is the Bitcoin chart you requested. Circled regions highlight trap release points where technical criteria converged. Entries near those swing trap clearances historically offer higher probability setups. Always check rhythm flows and wave structures on each time frame. 7. Rhythm analysis. Short-term rhythm. Expansion phase confirmed after trap release. Momentum building swing rhythm. Stabilized contraction with clear support at $106,000. Ready for expansion. Midterm rhythm. Expansion resuming above key pivot at $97,150. Signals longer-term uptrend continuity. 8. Financial overview market cap. $1.8 trillion, representing over 50% dominance in total crypto market on-chain dynamics. Long-term holders continue to absorb profit-taking, maintaining upward pressure, ETF and institutional flows. Ongoing approvals and large-scale corporate allocations underpin institutional confidence. 9. News, risks, events, ETF developments. Continued SEC reviews and potential approvals fueling optimism. Regulatory watch. Global CBDC initiatives and U.S. policy signals creating both tailwinds and headwinds. Mining trends. Shift toward renewable energy mining easing environmental concerns. Macroeconomic. Dollar dynamics and Fed communications remain key catalysts. 10. Strategy scenarios. Checkmark short-term buy strategy entry zone. $107,700 conditions. Rhythm expansion plus short-term trend support plus volume confirmation. Checkmark swing buy strategy entry zone. $106,000 conditions. Rhythm stabilization plus swing trap clearance plus macro catalysts aligned. Checkmark midterm buy strategy entry zone. $97,150 conditions. Midterm rhythm expansion plus institutional inflow confirmation. 11. Elliott wave analysis. Current position. Likely wave 3 initiation after completing wave 2 correction around $97,150 scenario. Wave 3 targeting $136,000. Interim wave 2 support at $106,000. Wave interpretation. Wave 1 peak. $118,000. Wave 2 base. $97,150. Wave 3 projection. $136,000. 12. Community sentiment platform keyword sentiment summary Reddit #Bitcoin #BTC bullish trap cleared. Time to ride the next wave. Stocktwits $BTC hashtag rhythm optimistic strong support at 106K. Target 115K Twitter hashtag crypto hashtag Elliott wave mixed right pointing arrow bullish wave 3 could be massive. Watch 97K pivot. 13. Forecast and risk summary forecast. Breakout confirmed. Potential run to $118,000 short-term and $136,000 mid-term risks. Regulatory reversals, profit-taking by long-term holders, sudden macro shocks flow factors, ETF approvals, institutional treasury allocations, on-chain accumulation technical note. Key levels at $107.7 thousand, $106,000, and $97.15 thousand. 14. Advanced insights institutional flow. High net worth allocations increasing via OTC desks, social metrics. Bullish engagement up 45% month-over-month on crypto forums, on-chain indicators, active addresses and hash rate, trending higher AI-driven signals, algorithmic sentiment turning positive since trap release. 15. Disclaimer, this report is based on the VPAR rhythm analysis system. All rhythm flows, wave counts, and scenario setups are for informational purposes only. Investment decisions should be made at the investor's own discretion and risk.